Here's a prime example of a trade that might freak some people out. We have here the S&P 500 down today, big time. I mean, it's getting volatile. It's making some pretty big moves. Let's look at the charts here. This is the 1 minute. Let's go to the daily chart. We can see today it took a really big drop down. As you can look over here, it went 40 points. And this is a time where investors are worried about the emerging markets and that type of stuff. You know, stuff that drives the market or crashes the market or whatnot. But I'm still confident. We're still following a little trend line here. So hopefully we'll be up tomorrow back above this trend line. I can keep my position. I look at my position right now, and my position is a little to the downside. Okay, down about $416.92, and our break even is down here around 1620. Okay, as you can see down here, it's about 1620 to the downside. I look at the chart, and 1620 is way down here, so I don't really see that happening as of yet. I'm going to watch this support line tomorrow. I'm going to watch this support line. Just kind of hold on to my trade, and this is the management technique that we're talking about. Looking at my deltas, you can see I have the position here for March. I still have 45 days left, so I have plenty of time to make an adjustment. Look at my deltas. It's 18 on the downside, so it's a little bit high, but it's not really where we want to be if we want to make a change just yet. So we're still doing okay. On the upside, we still have some room to move this position if needed. The delta's all the way down to 3, so we can move this up to 10 or 12 if we need to make an adjustment on this position. Okay, and just analyzing this trade. So far, we're good. Sure, if I look at the my positions tab, I have a profit and loss of this open position of the XPX at $440. Okay, this is a loss, and this is important. This is only a loss if you sold this position today. We still got 45 days. Okay, we still have 45 days to decide what we want to do with this position. So don't freak out, don't get scared. This is actually my account. This is real money, this is basically what I'm doing with my money. I'm basically sending this trade and hoping it pulls through. I'm confident that it will, and I'm just managing it, you know. And here's something to point out. I mean, we've got a buying power effect of $8,000, and we bought this position when this was up here somewhere. Okay, as you can see here, if I click the control tab, or maybe it's the command tab. Let's see. I don't know why it's acting up, but let's see, view orders. No, it's not what I want to do there. It's not what I want to do there. Let's see here. Here we go. I figured it out. I don't know why I couldn't do that before. Looking at these trades, I have this position was purchased on January 24th. Okay, this entire leg. Okay, or I should say sold on January 24th. Something I want to point out: any investment you make, you're looking at potential gains, potential losses against what you've invested. And I'm looking at this chart. Okay, I bought this on the 24th, which means I bought it when the S&P 500 was, let's see if I can get a better view here. The S&P 500 was right here. Okay, it was at 1790. Okay, Now the S&P 500 has gone down to 1740, so it's dropped 60 points. Okay, that's it's a pretty big drop, you know. And some people wonder, does it have to go up? Does it have to go down? Really, it's really a volatility move. I mean, if some people have to gain past, have this stock come past the point where we originally bought it in order to see a profit. But here, as long as we stay in the middle here, that's what's so sweet about trading options is once this volatility goes down in the market, because it's not going to stay volatile forever. Okay, as you can see in the history, this is one of the biggest drops in the past year. I mean, look at this. Look how long this candlestick is. Where else do you see a candlestick this long? Back here, maybe in June, maybe 6 months ago. Maybe before that, 2 months before that. But definitely, this is one of the biggest drops. And once this volatility goes down, we're going to see this position come back up. We're going to see potential profit, and we're going to decide to get out. Sometime before the 45-day. We never hold anything till expiration, but we're going to get out sometime before that, and we plan to get out with a profit. But the important thing here is that you manage a position and you don't freak out, okay? Trading with confidence and knowing what you're looking at and knowing how you're going to manage and exit before you put on this trade is what it's all about, okay? All right. Some people teach courses, some people teach you how to set these up, but if you don't know how to control your emotions and how to just look at the numbers and trade by the numbers, you've only learned 10% if you've learned how to put this up. Anybody can put this up, but you've got to learn how to manage. And with that, we're going to take a look at this position. The next time we see a significant change, today's February 3rd, 2014, we're going to look at either tomorrow or Wednesday 5th or sometime this week just to see where we're at, okay? And we will go from there. All right, traders, trade with extreme confidence, and we'll see you next time.